What's up, guys?
What's up, you guys? How you doing?
We got a fun fucking podcast today.
It is fun.
It's been a long day for us, but we got a lot of topics to cover, so we're going to go ahead and get started right away. We got dividends are going down, stocks are going up, with Tesla leading the charge, U.S. debt, and then hurricanes hitting the Gulf. Today, we're also doing espressos. And we may or may not have already had 3 each, so get ready for that.
We can't have anyone freak out there, okay? We've got to keep our composure. We've gone too far. There's too much to lose. We've got to keep our composure.
We lit.
All right. We live, fam.
Yes, sir.
All right. 3, 2, 1, and start.
5 minutes, go. So first off, ladies and gentlemen, we got the dividend crisis that is going on in current day. Basically what's happening is a lot of companies are lowering their dividend or getting rid of it because they ain't got the dough. So
no dough, no mo dough. No mo D for no mo dough. You know,
that's
you
a
know
fact.
dough. You already know dough. You already know dough.
So let me just hit you with some facts real quick, then we can have a conversation. If that sounds good, keep watching. All right. The coronavirus will see the world's biggest firm/dividend payouts between an estimated 17 to 23% this year, which could equate to nearly $400 billion in slash dividends globally. This is nearly 22% drop year over year from last year, hence year over year. And this was the first time, this is as bad as the 2008.
I'm like the fucking signs translator.
2008 financial crisis. So we have some deep shit basically with these dividends. Now, a lot of these investors who claim to be dividend investors tend to be, older gentlemen.
Yeah.
Who enjoy their dividend every quarter. And unfortunately, it's not going to be enough. They're going to get less or they ain't going to get any. And so, what do we say to that?
Well, I got a lot of thoughts on this. We ready to open discussion?
I think we're good.
All right. So those are the facts of the matter. But when I see dividends, I think, okay, that's money that I'm going to get if the company's profitable because I'm an investor. They're going to reward me for investing in their company. The problem is a lot of young investors, we're supposed to be the ones reinvesting our dividends. The older investors, what they do is they have the dividends because they have buy dividend stocks so that they basically have a higher pension ratio. They get more money than if they put it into, let's say some other bullshit because dividends pay out quarterly as long as you stay in that stock.
Yeah. If
you pull out and you sell your stock, you don't get any more dividends because you don't got no stock.
You ain't get shit, Jack.
So the way how I look at that 22% decrease on average is that if you're living off of dividends, it's going to extremely affect you because that's 22% of your income.
Mm-hmm.
Whereas, and that's a huge problem. A bigger problem is that people rely on, dividends as their pure source of income at a certain age. Some people.
Yeah, for it to be actually sustainable, you have to have a lot of money in the first place to be.
Yeah. Because the dividends, a big dividend payout would be 5%.
Yeah.
That anything more than that, you'd have to be well, is the company even going to fucking pay their dividend?
If you got $100,000 in the stock market, you get 5%. Assuming you have everything dumped into one stock that's yielding you 5% dividend.
Yeah.
You're gonna get $20,000 over the course of a year or something like that.
5% of $100,000 is that's $2,000.
5% of $100,000.
Wait, we should probably that's $5,000.
$5,000. $5,000, but then you get a quarter. You get it quarterly, right?
Fuck.
So that's $20,000, right?
Yeah, it's yeah. Oh fuck yeah, dude.
That's some crackhead math right there, baby.
Dude, yeah. I was completely wrong. They pay quarterly if it's a quarterly dividend, and
if it's a quarterly
5%
dividend
on $100,000, then that'd be $20,000 a year. Yeah, and some people live off that, which is totally reasonable. But the problem is when you cut 22% off that $20,000, that's
bad.
$4,000.
That's some bad news.
That's quick
bears.
math too. Yeah, that's
that was quick math.
It's whatever. But the big picture problem that we're trying to poke at here is that older investors are probably not going to receive the dividends that they want to receive in the amount they want to receive.
No.
And young investors won't have those dividends to reinvest.
No! Stop screaming.
So, with all things considered, people are not getting the money that they expected. So, when a consumer doesn't get the money they expect, they can't spend the money they expect, and it trickles down to the company doesn't sell enough product, and therefore their valuation goes down, everything goes to shit. Yeah. It's a system. You can't look at it as so then a certain people won't get their money. So what? Why does that matter? No, it's not just a fucking there's the problem. It's
Yeah.
it's a big thing.
One thing affects another. So if one thing goes wrong, it affects something below it, and then it just trickles down, and then that's the economy pretty much.
Call it Trump down, trickle down economics. I don't
sir.
know.
I'll call it something fucking like that.
Fucking Hillary during the debates. Call it trumped up, trickle down economics.
I don't know. I guess if I had to call it something off the top of the old dome with no prep whatsoever, I don't know. I guess I'd call it trumped up trickle down economics.
To put it simply.
To put it simply, no, but yeah, the reason why I think this matters is, like I said, if you're young and you're getting into investing, a dividend ratio payout of about 5% is a pretty good payout. And, once they slash those dividends 22%, of 5%, that'd be, cutting it about, what is that, 0.8%? So you're looking at 4.2%, I think. We'll put the math up on the board.
Yeah.
That could be totally off. But
Yeah.
the big picture is it's cutting off people's expected returns, and therefore they're going to have to either cut their budget or they're going to overspend, and then we're getting into a debt issue here.
Yeah.
And that's not fun for anybody. Okay.
What a great time to end that.
Yeah, let's
Load me
kill our
up.
cups. Yeah. You want to
I'm
start us
like-
off with what?
I'm like, all 145 pounds of me is just like, what the fuck is happening, Riley? 6:30 and you've had 4 espressos.
I'm like,
I'm too fucking good at this.
we did a little whiteboard thing yesterday, and we had to check out our last video if you want to figure out what I'm talking about.
Yeah.
But basically, we'll put it right here on the screen. My ass did 15. That video's not even sped up. I was just like, all right, let's go, and I just read it super fast, and then it was like, fuck it.
My guy was chucking markers every time he finished writing. He's like, it was great.
Dude, straight up, chuck it, fuck it. I don't give a shit.
It's a
fucking marker.
It's a fucking marker. I was about to say
The
that.
fucking marker, bro. Why the fuck would I give a fuck about a fucking marker, bro? Fuck you.
Fuck a motherfucker named Marker.
Dude, fuck
Alright.
a motherfucker that it goes bear on Tesla. Who the fuck goes bear on Tesla? You fucking betting against Tesla? You want to get into talking
Boy,
about that?
do
by the
I
way?
have a guy for you,
All right,
Stevie.
we're gonna get our next topic going. We're talking about stocks. We're talking about how Tesla is still up in the news because they just won't stop. But
They
some
don't stop.
motherfucker thinks they will, and he prices Tesla realistically at $87 a share.
This
fucking
guy's name
idiot.
is Gordon Johnson.
Sounds like a fucking tool.
Doesn't sound like he is.
Sounds like he's not a part of Wall Street Bets. No.
Sounds like he is.
Yeah, no, exactly.
He's a fucking degenerate.
Fucking degenerate.
So this dude's a CEO of GLJ Capital, and he put out a price target, I think this morning or yesterday, saying that Tesla is no more than an $87 stock.
Fucking
Well,
idiot.
Gordon, I've got some very
Yeah,
har-
let
harsh.
this 22-year-old kid tell you how
Yeah.
fucking stupid you
Dude,
are.
I've been in this game fucking so long, dude. You have no idea. Longer than you. I haven't, but I know more. So
So suck my fuck.
yeah. So basically, the way I analyze Tesla, I think first of all, I think Gordon analyzes Tesla as just a car company, just as this dude selling cars, electric cars. Yeah, what up? He's a snowflake. Electric cars.
Yeah, and
Save the
he's looking
environment.
at it as the car industry that's been around forever.
Exactly.
Instead of the electric autonomous car
He's
industry that
relating-
isn't even around yet.
He's relating
really.
Tesla to he's taking Tesla and synonymizing it with fucking Ford and with fucking GMC. These
And, yeah.
ancient companies.
GM, who's sub $10 a share.
Yeah.
Like, dude, fuck off.
You got me fucked up, Gordon.
You got me fucked up. You got me fucked up.
Yeah.
Ford's
Ford's about to go private, and he's trying to compare them to Tesla. Like, the fuck you talking about?
So Gordon, first of all, Tesla has the biggest market cap
Some
out of
boomer shit right there.
Tesla.
Oh,
got
Tesla's $87 a share. bro.
Tesla's got the biggest market cap out of all other car manufacturers, and if you were to add up all the car manufacturers and leave out Toyota, Tesla would be worth more than all of them combined. Which is fucking brain blast. I know. And then secondly,
We'll put that shit up just so you know
yeah.
what the fuck we're talking about.
Exactly. Secondly, Tesla is not just a car company, Gordon. Okay, they make solar panels,
Dude,
and not just solar panels.
Call him Mr. Johnson at least, man. You got to give him some respect. Call him Johnson.
Hey,
Look here,
hey,
Johnson.
Mr. Johnson, can I talk to you about some stocks? So, Tesla makes these solar panels, and they're not just any solar panels. They replace the shingles on your roof, and they replace the walls in your fucking house. So your entire house is going to be a massive fucking solar panel that's going to generate electricity, not free electricity. You probably have to, you'll probably figure out some fee for that. But in other words, you're not like paying Edison every single month for your fucking electricity bill. And then secondly, or I guess thirdly,
you're talking about Solar City, right?
yeah, Solar City is a subsidy of Tesla.
Not subsidy, but sub company. Was it subsidy?
It's a subsidy, yeah.
Oh, is that how you say it? Okay. Fucking idiot over here.
No, it's all good, man. We're both fucking idiots.
I remember when I first started.
I remember my first subsidy. And then thirdly, I think that this is going to be widely adopted in the industry. So, I mean, Tesla's not really like any other stock. It has like an insane cult following that like not any other stock other than like a few, maybe like Apple, like people that like buy this product and they're like fucking loyal as shit to it. Like they won't be like a Tesla owner.
The consumer retention rate's unmatched.
Yeah.
Because you got to think, if you're going to have a company and you have a strong brand like Tesla, once you get that taste, once you go Tesla, you don't go back.
It's like a boomer's relationship with like a Corvette or
some shit. Or fucking Republicans and Reagan.
Exactly.
It's
like
So. Tesla will go to 3,000. And this guy's like 87. I'm calling it 87. I'm like, dude.
All right.
It's so polarizing how they're so different, though. One guy's saying my take on this is that, yeah, Tesla's overvalued. But guess what, Mr. Johnson? So is the rest of the market.
Exactly.
So you have to look at the big picture. If the rest of the market's overvalued, Tesla's really not that overvalued right now. And in fact, they're doing a stock split because they check themselves. They're like, I mean, Elon, before they hit 1,000, he was like, stock's overvalued. Like he even admitted it.
Yeah, it was at like I think he said at like $500, or I think it was like 800 actually.
Yeah, he's like Tesla's too high.
Shit's overvalued, and then like 2 months later, this full stock is at like $2,100. It's insane.
Yeah,
it's like literally unmatched.
And all right, I want to talk about a little bit about the S&P Dow Jones.
Yes, sir.
So this is just a quick little in the news, breaking news, and why this matters. So Dow Jones just kicked 3 of its long-term stocks: Exxon, Mobil Corp, Pitzer, and Raytheon Technologies, respectively. The reason why this matters is because they replaced them with Salesforce, Amgen, and Honeywell. So these blue chip index, Dow Jones, I'm pretty sure everybody who's listening to this should know about it. If not, check out Dow, check out NASDAQ, check out S&P 500, because those 3 indexes really are what people determine as the market. So even though, in my opinion, it's not a good representation of the economy, stock market, economy, 2 whole separate things. We're talking about
Agreed.
stocks right now. And I'm just going to cut to the point. They did this because Apple just did a 5-to-1 split, putting their tech sector, that's a price-weighted index, way misinvalued for tech. So they added Salesforce to increase that tech sector once again, because other indexes like NASDAQ are more tech-weighted. Therefore, they need to keep on par with their competitors. That's my take on it, though. So what you should expect is the Dow, it won't have any effect on the points because it mentioned that in the article I read. We have all articles attached for reference, by the way. Long story short, Dow is going to be a little bit more tech motivated now, so you're going to probably see that correlated more with the NASDAQ and S&P because the Dow was kind of doing its own fucking thing for a little bit. Alrighty. Moving on with the next cup. Dude, I didn't even finish mine yet. Shit.
Oh, good lord.
Okay.
I think I'm gonna hit the sack tonight at probably like 3 in the morning.
You're gonna go to bed tonight?
True. That's true as fuck.
Dude, I'm lucky. The last time we did this podcast and we did it this late, I didn't go to bed till 2:30 a.m. and I usually go to bed around like 10 or 11. I go to bed early.
I'm normally in bed at like 10.
And then goes to sleep at 3. Half our generation.
More or less. You tell yourself, you know what, just 15 minutes on TikTok, and then that fucking...
Dude,
you
I can't
open your eyes and it's 3 in the morning. You're like,
I can't do TikTok. I feel like I'll get addicted to it.
That's what I thought, and that's what happened.
Yeah, exactly. Exactly. Dude, you see your TikTok. Wait, that one's mine here. Give it back.
Give it back. Dude, my side hurts. I think this caffeine is burning a hole in my stomach.
Oh yeah.
You're like, yeah.
No comment.
You're like, fuck, it probably is.
I mean, I'm fucking 265 pounds, so I just I fucking unit, man. I'll do 15 espressos and walk through a fucking wall. I don't know.
Yeah.
But I don't think it'll burn a hole in our
I'm
stomach.
140 pounds and I'm probably going to be awake for the next 2 days, so.
I
Hey,
think I'm just
man.
gonna read tonight. Like
It's
read a
all good.
lot. I'm gonna read. I think I'm gonna read tonight. Yeah, I think I'm gonna read a lot of books. That's what I'm gonna do. And then in all
Books.
reality, I'll just be like, fucking
Yeah.
Tinder, man. Fucking
Notice
fuck.
the plural on books, not just one.
Yeah, books.
You're reading a bunch.
Alrighty. So I'm gonna take us away to start off with the U.S. debt crisis. So I don't know if anyone knows, but we just spent $3 trillion this year so far. It's not over yet, folks, on our government spending. So the good news is it's not uncommon for in times of war to spending money. The bad news is it shouldn't be this fucking much for what we're doing. So to fight the pandemic, governments have borrowed so much that debts have returned to levels only seen at the end of World War II. So to put things in perspective, we didn't go to war with anyone. We just had shitty leadership, okay? We should not have this high of a debt crisis in comparison to other countries. With that being said, I'll bring up the fact that the U.S. budget deficit reached $3 trillion in the 12 months through June as stimulus spending soared and tax revenue plunged, putting the federal government on pace to register the largest annual deficit as a share of the economy since World War II. So, federal deficits typically widen in times of recession and narrow when the economy grows. This time, the deficit was already rising in the final years of the decade-long expansion that ended in February following the Trump administration-sponsored tax cuts of 2017. So, what I'm trying to get at here is we were already fucking shitty with our money before Trump gained presidency. Like, we just didn't know how we were in an economic increase, but somehow we just couldn't budget it. We couldn't get our shit together. We were like, how much money are we making? A shit ton? Cool. Let's spend more money.
Spend more, yeah.
And instead of having money in our reserves, and the chart's probably up by now because we're so fucking good at editing now that you can see exactly what I'm talking about.
That's a fact.
Yeah, but among advanced economies, debt rose 128% of global gross domestic product as of July. This is according to the International Monetary Fund. I don't know if I'd trust them. No, I'm kidding. But in 1946, it came to 124%. So we're looking at a 128% increase in debt compared to 124%. Just let that sink in. Does it feel like wartime right now? Because it feels like a fucking civil war in America. But it doesn't really feel like we're up against an enemy or anything, even though it's like the enemy is out there. No, it's not. It's not. What it is we have shitty leadership, shitty fucking money that's being spent, and just it's all going to shit places. With that being said, we did spend a lot of money on small business loans, about $500 billion, but that's only out of $3 trillion. So to put things in perspective, we usually spend about, I'll put the fucking numbers out there. I don't want to fuck it up. But yeah, so through the late 1950s after World War II, economies soared with an average growth of 5% a year in, seventh world countries like France. Seventh world. bigly corporation countries, fuck me. 5% a year in France and Canada, almost 6% in Italy, and more than 8% in Germany and Japan, whereas the U.S. economy grew about 4%. So in recent years, the U.S., UK, and Germany have grown about 2% a year, Japan and France closer to 1%, and Italy has barely grown at all. I'm stating all these facts because I want the bigger picture to be shown. We're not growing like we used to, and we're supposedly in wartime. And on top of all of this, our debt is just as equal to wartime debt. Now, with that being said, I'm bringing up the USDebtClock.org right now. As you guys can see, we have $26.678 trillion in national debt as of this posting. So I want to take it over to Riley. How do you think this debt is going to cripple America in the recovery, considering our jobless rates as well as the real estate foreclosures that will happen because people are not working and money is running out?
Yeah, this is how fucking everything started in 2008. That's it. That's all I gotta say.
We're fucked.
Yeah, there's nothing more to say than we're fucked. Yeah.
But how exactly are we fucked? Because, you can get fucked in the face, fucked in the ass, fucked sideways, fucked upside down. How are we fucked?
I don't know.
I think we're fucked. I think we're literally fucking ourselves because we didn't have... Well, that was weird. I literally vomited in my mouth. So we didn't have to get ourselves into this crisis that we're in right now, but we have to get ourselves out. And the only way we do that is, I think, through getting people to start working again, even though we're in a very, very difficult situation with that. I think we follow Japan's lead as they barely saw a decrease in their economy because they just wore a mask. Is that hard? No, but they also praise hygiene and also, proper treating yourself right. You can look at the obesity epidemic rate. as shown here, because we can fucking do that now. But yeah, I think a big thing that we should mention is that America is fat and that we don't know how to take care of our health, and that could be playing a big part in why we're getting hit so hard by this virus.
I think, kind of adding on what you were saying, it's just more or less just like really shitty leadership. Like we have the people in charge of our money in this country are some of the most like, I mean, the proof is in the pudding. It's some of the most financially illiterate people to fucking walk the fucking earth. I think we need to replace whoever's fucking in charge of the money, whoever's fucking in charge of spending, and actually like have some like financial literacy and know how to like allocate capital to certain things.
The Senate and the Congress, they also were in charge of the Saves and Cares Act. You remember that? Or is it Helps and Cares Act? Some bullshit like that.
I think it was
they didn't help and care at all. What they did is they fucking gave like enough money for people to fuck off, and then they gave a shit ton of corporations. And the tax cuts do not help either, because there's this other principle where it's basically if you do a tax cut, then the people that were originally spending money that got that new money that they're saving are just going to save their money until the next tax cut, because the government's going to need to pay off their debts. And how do they do that? They increase taxes. It's bullshit. But why don't they just decrease spending? I don't know. What do you think about that?
Yeah.
All right, let's move on to the next topic, though. So, yeah, the U.S. debt crisis is not in a good situation, and I think it's going to be a long-term effect that we're going to have to recover from it, because we dug ourselves a huge hole in just a couple months through shit leadership. And that's not just from the fucking Trump administration. That's from the Senate, Congress. Every single part of our administration, I think, failed us in this time that we need them.
Yep.
Okay, moving on to a happier note.
Yeah.
Not
really.
environment's fucked.
Yeah,
so
not really.
We have 2 big hurricanes. Fuck me. Another one? Jesus Christ.
Yeah, so we got...
This isn't fun anymore.
I want to go home.
Literally, dude.
You want to whip up that timer right quick?
Yeah.
Five minutes on the clock, starting now. All right, so you guys may or may not have heard. There's a couple storms coming to the Gulf Coast, which is kind of like in between Texas and like Louisiana, Florida area. That place that always gets fucking hit by hurricanes this time of year.
Let's get a beach house there, bro.
Yes,
probably
sir.
really cheap.
It's probably
right
really
now.
cheap, actually.
Jinx, you owe me a house in Florida.
So this is actually somewhat of a double header. So there's 2 storms, and they're both coming like right after each other. Now the issue with this is that 45% of where we refine our oil in the United States is in that fucking stretch of land, and 17% of it is where we produce the oil. And so this can really fuck up our oil prices and make that shit go up, because all these oil companies and
how ironic is that?
And refineries and
that we just went through $2 a gallon. We're about to go see 10. No.
And all these refineries and stuff are shutting down because of this. Last time, I think it was like 3 years ago, was it Hurricane Harvey, I think? That was a Category 4 hurricane. These are going to be Category 2s, or they're predicted to be. The refineries were closed 2 weeks after the fact. So they were closed for like a total of, I don't know, call it 3 weeks or so, roughly. Mm-hmm. And so I think we can still expect a bad outcome to this, but it might not be as drastic as Hurricane Harvey.
Yeah, and did you mention how 45% of the United States oil processing and roughly 17% of U.S. oil output is narrowed down into the stretch of that land?
Yes, sir.
Because that's a huge deal to me, because you have to think, as a nationalist perspective, we're not making enough oil in America to sustain ourselves when it's coming from Gulf area. So we're going to have to import it, and those import costs are going to fuck us sideways too. So we really have to think about what's going to happen to oil prices from a futures and options perspective. I think right now it's already priced in due to the hurricane season, because we assume every year that hurricanes will happen. So then oil prices go up. So that's already priced in. But what's not priced in is the fact that it may fuck up the factories. See, that is a huge deal, because usually it's used to maybe Florida oranges or something in that lines, but not really the manufacturing process of oil in America. So if I was a betting man, I would say oil prices will go up, gas prices will go up. If you're in a plane because they use that to price, it's probably going to go up. So flights will go up, I'm saying. Everything's going to get more expensive, which is a perfect time because we have so much money to spend. The business has been booming. Everybody's been working, and it's just going to be fine. No, fuck that shit. We're fucked. So... we mentioned this last episode how the Iowa derecha is just destroying our corn, and that when you have a commodity such as, soybean oil, and then another commodity like corn, both being fucked, it's going to screw up that commodity's pricing like no other. So what's going to happen here is that oil, if there's a close substitute to it, that price will also go up. So let's say what's the substitute for oil? Some other substitute for oil. I know I'm blanking on it. It's on the screen now. Haha, fuck you. Yeah, I know there's a substitute.
We know how to edit, bitch.
Yeah. So if you're an investor, you could probably price that in also. So I think that the big thing to take away here, though, is that if prices are going to increase for oil, which is a commodity, you may see spending decrease. And that has a systemic effect on the economy, because if people aren't spending from big corporations won't be earning money. And then if they're not earning money and it shows on their balance sheet, the stock price will fall because investors do not have confidence in that company. And confidence is what really dictates the stock market, not actual valuations.
Yep.
So right now we have a bunch of pseudo confidence in the stock market. And I think it's really, really fucking up everyone's image that the economy is a stock market. It really opened my eyes that it isn't, because the economy right now is in shambles, but the stock market is doing great. And you can see that through the tax cuts that Trump did, making them go from 35 to 21% on corporations. Huge 14% tax cut. They really boomed. But the problem is that tax cut will eventually fuck us over. Like I said, there's the principle again. I don't know the name of it, but it's on the screen now, because I'm fucking that good at editing. No, but you can put a fucking photo on a screen. What a fucking monkey figured out how to use fire too. Congratulations. But yeah, to end this little tangent on the stock market, and reflecting the economy, it does have a play with the oil crisis, because when the price of oil and the price of gas increase, consumer spending will change, because price really will be the dictate of that.
Yeah.
You're going to definitely change your behavior when a price of something goes up. So if a price of something that transports you from one place to another increases, there's going to be less travel. With less travel, there's going to be less spending. With less spending, there's going to be like I said, it's all fucking connected.
It all dominoes down the line.
But on that note, we just finished, and yeah, I mean, overall, this episode we covered, like I said, 4 major topics of the dividends are going down, stocks are going up with Tesla in the charge, U.S. debt, and hurricanes hitting the Gulf. These are just 4 simple topics we chose to cover this week, just because I felt like they were the most impactful, and that you could probably learn something now to change your future in this coming week, month, year. So yeah, hope you guys enjoyed it.
Thank you for tuning in, as always. Cup of
Cheers.
Commerce, signing out.
You gonna cheers me, baby?
Yes.
Oh, that was terrible. One more time. There we go.